Good morning, everyone. I hope everyone has had a fantastic day. Philip, how are you? If you can hear me in the chat section, simply say hi. My name is Samson Mzera, and I'll be taking you to today's session of Market Snapshot. For this week, it's just a continuation of what we had last week, and that is simply our plays for last week. So we're just reviewing what we discussed last week and how that will translate to what you need to look forward to next week. In fact, next week we have non-farm payroll, so it's going to be very packed. Chris Mugambi, hi. Philip, Derek, hi. Matt, nice to see you guys. Also for attending. Okay, so first off, I'm looking at the gold chart, and this week has been very wild in terms of gold. This week has been very wild because we've had gold dropping by about 600 points. And just to put it on the daily chart, just a minute, let me put that over there. Just to put it on the daily chart, this is today, Friday, Thursday, Wednesday, Tuesday, Monday. So we've just been dropping for the better part of the week. And finally, we are seeing some sort of retracement to where we were at yesterday, the range we were at on Thursday. And the reason was simple. Yes, last week we said we expect the dollar to continue strengthening, and you can see across the board, the dollar was indeed strong. So we're going to discuss what is this pullback here and how to handle it, and if we expect this trend to continue going lower. So I can see even for Euro USD, for the better part, this is Thursday, Wednesday, Tuesday, Monday. Yeah, so from Monday, we've just been dropping, and then we've had a retracement finally yesterday and today. Same thing with USD JPY. And then if you look at USD JPY, just a minute, on the daily, it's more clear. So remember our discussion with a risk of a central bank intervention when the price of Japanese yen becomes too cheap. So that's one thing we'll be careful with when trading USD JPY. But then again, it's still been weakening. So just to review our plays from last week, I think the only one that didn't work out correctly for us was Euro CHF, because I'm aware that Euro CHF here from last week's market snapshot, just a minute, templates. Actually, yeah. So from last week, we said that the central bank or the Swedish National Bank was keen on seeing the Euro CHF rate go lower. And that's why we said we had to be careful with this. And in that case, we didn't quite see, just a minute. Yeah, we didn't quite see a very huge uptick in the price. So we were expecting this to be short, but it didn't happen. Instead, we had a range. So this is the only play that I think we still need to wait to get more opportunities. But as for the rest, as stated earlier, a strong dollar was going to be the theme, and that's what happened. But now let's look at this week. Let's review the news and what we should be expecting next week, and how should we position ourselves in terms of sentiment for this week. So first thing, as usual, let's go on the commentary and see where to start with. Okay. So so this is the main title today is a dangerous correlation for the euro. So they're saying despite the treasury sell-off and strong US data, the dollar has entered a correction, probably due to quarter-end flows. Yeah, so you usually know that September is the last month of the third quarter, and that simply means if you have a lot of these companies, they'll probably be offsetting their positions. You'll have even normal companies probably remitting profits and things like that. So it's usually it usually happens during the end of quarters or during the end of the year, and that can probably explain why why we are seeing a big correction in the dollar, because we're in the last month of the quarter and the year is almost ending. So I hope this year has been also good in terms of trading for you guys. So they're also saying from just this statement, despite the sell of strong US data, this has been the theme throughout, and this suggests that chances are the dollar will continue being strong going forward. So let's just go to the article and then we see how to position ourselves. So here they're saying G10 FX volatility has rebounded in the last week. So it's still the last month of the quarter thing, and that's okay. The consensus of yesterday, we had jobless claims coming in at that number. Figures that they kept pointing out that is inconsistent with peak inflation, pointing out that the jobs market that is inconsistent with peak inflation. So there was a narrative that inflation has reached the highest. There was a narrative that probably the Fed now needs to start cutting rates. We are at our highest ever inflation in the US, but that is not the case. And that's what they're saying here. According to the data, it's very inconsistent with the narrative that there is peak inflation. Yeah, especially adding the recent rise in oil prices. So now you have oil prices rising, and that might also double down the fact that inflation might continue to rise, or it might be persistent, most likely rise high, especially energy and fuel related items. So having said that, what are the chances of us seeing a pause in hikes, a definite pause in hikes, or even what are the chances of the Fed starting to lower interest rates? They're looking very slim. And that's what the article is saying. Markets are, like ourselves, skeptical that the Fed will raise rates again, given the government shutdown prospected to drag. And this has been adding pressure on long-term treasuries. So I don't think the government shutdown will affect the market significantly, only that we'll have a pause in some of these government activities and things will slow down, yes, but I don't think it's going to be to change the status quo that we're in as much. So here they're saying 10-year and 30-year treasury yields are now yielding at this, the highest since 2007. Yeah, so remember, treasuries point where the market thinks the interest rates are going. And if treasury yields keep on rising, probably the market thinks that we'll have higher interest rates for longer. And also if treasuries are rising, then that makes US treasuries very attractive. And that means there's increased dollar demand across the board. So dollar demand, again, remember, it's going to strengthen the dollar. So the highest since 2007 and 2010 respectively. Yeah. With the 10-year BTP bond spread briefly touching 200 basis points yesterday. So this is so BTP is a Italian bonds and Bund, of course, is a German bond. So the difference between the two usually reflects the level of risk in the market generally, and the level of risk aversion that is there. So that means, all in all, everything seems everything seems to be pointing. Let me just highlight this. Everything seems to be pointing to a stronger dollar. Yeah. Now, if you go back to the charts with just that information that we've unpacked, it explains, number one, why we still are in this trend and why this move over here, this is GBP USD, for example, why this move over here looks more like a pullback than a reversal in the market. We've said, number one, you're coming to the end of the quarter, so people will be taking profits, balancing their books, and that's why you have this move up here that looks more like a correction than a change in the market perception. If you go to the higher time frame, it becomes clearer, considering we've had this extremely strong downtrend over here. So what should our play be? This is on the daily time frame. I should expect a retracement, the farthest probably here, which is on the daily resistance where we had the previous support initially. Or if you are to continue going higher, then this supply zone over here, it's probably another place for GU. So yeah, so this is probably another place for GU pull back to, then we continue going lower. Some share you what did Powell say. So we'll discuss Powell. I don't think he said anything substantial because the markets didn't react. I'm interested in buying testing software. Which one will you? We'll talk about that. Do you think there'll be a government shutdown in the US? Probably. What's the difference between a reversal? Is basically these arrows. Just a minute. Just a minute. So a reversal, it's by reversal, I simply mean a trend reversal, and that simply means us going back up. Yeah. So you're trying to deduce, is this move here a reversal where the trend is changing, or is it just a pullback where you're having it come slightly up and then continue going lower? So that's the question we're trying to answer. Anytime you see this is a reversal, when the market starts trending upward again, that means the trend has reversed from being bearish to being bullish. I don't know why this is stuck here. Okay. So let me just move this. Yeah, so a reversal means us going all the way. A pullback just means maybe the market coming here or here and then continuing with the downward direction like that. So that's what a pullback means, and it's different from a reversal. So now as a trader, anytime you're trading a trend, you need to deduce, is this a pullback or is this a complete reversal? And that can be based on either your technicals or fundamentals, even if you can do them well. It can give you a good explanation. First off, why do we have a downtrend? That we've explained it. Dollar strength and the fact that the market is expecting higher interest rates for longer. That's number one. Has that view changed? Has that opinion changed from last week to today? No, it hasn't. The opinion is still the same. The view that the Fed is likely going to keep higher interest rates for longer, even from the articles that we've seen. Now, noting that that view hasn't changed, you can, noting that, you can then deduce, are we going to see a trend change? Maybe if the market opinion completely changes, that's when we'll see a trend change. The other way you can, if you're not able to explain it fundamentally, then you can just wait for confirmation of higher highs and higher lows, or some technical way to know that the trend is changing. But based on fundamentals alone, I don't think the view has changed. And that has to say something with how you should position yourself as a trader. So let me just delete this. Yeah. So that's with GU. If you look at XAU USD, it's the same story. On the daily, to draw this, so I'm using the default MetaTrader 5 for today. So on the daily, you can see we had a channel like that. And then you can see that we also had a gap. On the EGM MT4 and MT5, this gap is much smaller. So I'm using the default Meta 5 application for today. So having said that, we're in a channel, and then the market has pushed way up to into this gap on the daily time frame. And now we're seeing some sort of pullback, which is understandable because we have dropped day in, day out from Monday on gold. Yeah. So there were some very good selling opportunities from last week when you talked about looking for dollar strength and looking for shorting opportunities in gold, for example. So in this case, what to expect next? What do you expect next? Number one, from a technical standpoint, this move here, this move over here, just a minute, let me edit this. So we've covered gold, sorry, we've covered pound, this is gold. Let's just have a look at it. Just a minute. Yeah, so we've covered pound, this is gold. We should expect a pullback or a retracement. We should expect a retracement because the market has been dropping. It's all just bearish candles. We've not seen one proper pullback in a long time. So In this case, we should be positioning ourselves after a proper pullback on gold before we continue going lower. That means you need to be very careful where gold is at the moment. Yes, it's supposed to be selling, but how is it supposed to be selling? Should we see faster retracement before continuing lower, or would you want to buy at the low? Which I wouldn't. In this case, that will be very risky in terms of technical analysis, because you're buying in an oversold region. So you'd have to use your technical analysis and find out optimal entries based on the direction of the market, yes, but after a healthy pullback in this chart here. Yeah. Euro USD, same story. So you can see right now, when fundamentals are in align with the technicals, everything is usually very smooth. You know what to look for. You know you're looking for shorting opportunities using technical analysis. You know you're in a downtrend. We've come back to this major daily support over here. So it's very straightforward what you need to be doing. However, still need to be, oh yeah, we'll talk about next week, what to expect next week. But yeah, in this case, we're still waiting for healthy pullbacks. Personally, I'm not convinced this is the last of this move. Considering we've had such a huge move from yesterday. So, sorry, from the beginning of the week. So this was Thursday. This is Wednesday, Tuesday, Monday. So this was where we were at Monday, and we've just been dropping for the better part of the week. So this pullback is explainable, yes, but let's see what it can do for the rest of the day. So today it's a wait and see sort of, but there's no news. So today is a wait and see sort of game, so that you know what exactly, where exactly you should be entering in terms of looking for opportunities to take the market lower, because it could potentially go lower from here after the retracement is complete. Remember the last time we had, for example, Euro, the ECB talking, we had this move over here. I think it was this one. And then we had to wait for an entire pullback. And then the Fed meeting from that week made this move over here. So there was this pullback. That's what I'm saying. Usually when the market moves so much in one direction, it's probably good to wait for a pullback before you continue going. And probably this region here, because this is where we started selling, it's probably a good place to see, could the market potentially start going lower from here? That's Euro USD. USD JPY, same story. Again, remember the yen runs a risk of central bank intervention. So even as you're looking for longs, because the dollar is still strong, even as you're looking for buys, remember there is the potential of the Central Bank of Japan coming and saying you're selling USD JPY and they want this price to come lower. There's always that potential, because they did it last time, they might do it again. So be careful when you're trading USD JPY, because intervention is still a big factor to consider. Yeah, so this one might be a tricky one to trade actually. So be careful with this one. Okay, so there was stocks. I'm seeing oil and okay, let's see if we can have oil here. Just a minute. I don't think the default. Let me just open my GM MT5, then we get on to this. In the meantime, we can be asking questions. So we look at oil and Nasdaq. Well noted. The DXY is on a 4 channel and early days. The trend has reversed. Early days to say. Yeah, for DXY again, still somewhat Euro USD, most of it. And it's still too early to call for a trend reversal. So the thing is, we might want to wait unless the mood in the market changes. That's what we're going with. Or unless the ECB comes in very bullish. I mean, very hawkish. But based on fundamentals, I don't think it's safe to say that we might see a change in the direction at the moment. Okay, this is oil, UK oil. Just clear this. So if you have any questions, you can just ask them while we discuss these. UK oil, and we had what? Just a minute, just a minute. Let's look at any news for oil we need to update ourselves with. Just takes. Okay, in the meantime, so previously we had talked about oil breaking this yearly range here. And we had said for oil, it's good to look for a retracement, but we never got our retracement. When it came to oil, we never got a chance to wait for a good pullback to enter this market. So yeah, so sometime back, I remember we had said maybe we should wait for a retracement back to the range before you continue going long. But sometimes with news, usually it pushes the market so much you don't even have a chance to get a proper pullback. So I didn't manage to catch any move on oil. Although, let's see. Let's go to the news first. So you're saying the oil market is struggling. So it's the oil market is struggling to make further gains now. It is in an overbought territory. Meanwhile, gas oil market has firmed, with China unlikely to issue further refined product export quotas. Okay, that's on the gas market. So they're saying Brent struggled. So here they're saying Brent struggled to hold on to gains made in the early part of the trading session. There is a reluctance amongst participants to push too much higher right now. The market clearly knows, but there is also possible nervousness. OPEC officially could start to ease earlier than scheduled. So it's always good to look at these things so that you don't necessarily get caught off guard when you don't know when the trend is going to change. So they're saying there's some sort of nervousness, but I'll still think it's too early to say that oil is going to reverse. So sometimes when you're trading, you don't necessarily have to know what's going to happen. You can also say what's not going to happen. And what's not going to happen is, based on the current conditions, oil getting back into this range is not going to happen unless something changes substantially in the market. So that for sure we know. So that means, let me go back to this range here. So that means any significant drops in oil, the price of oil, is a good chance for us to look for buying opportunities, or potential buying opportunities, of course, based on your own analysis, because it's unlikely that oil is going to drop significantly from where it is, based on the fact that they're still cutting. Okay. That's on oil. Let's see on NASDAQ. Where's NASDAQ? UT 100. Okay. Just a minute. So UT 100 is a bit obvious because it follows sentiment in the market, it follows the Fed and the like. So, okay. So in this case, on the daily, we had a break lower. So we had that over here. So we had a break lower in the trend. This might say that we might start seeing a downtrend in the market, although I'm very highly skeptical, because most of the times you'll find that there's a brief scare in the market and then everyone wants to not be caught off guard and everyone wants to start buying these companies. So it might be a tough sell for us to think the markets are going to drop further. And even if it does, then there are key levels that you can be looking for any potential targets. So in the event, if you believe prices are going to continue going lower, which there is every reason to believe so, considering the Fed is still hiking, is still persistent on being hawkish, then So considering that the Fed is still hawkish, then if there's good reason to believe it's going to continue selling this, then this is potentially the first area to start looking for potential reverses. And if that doesn't hold, sorry, this is the daily. Yeah. So this is potentially one of the areas I'd be looking for, considering there's an imbalance here. If prices are going to rally up this point, then this is where technical analysts would want to look for potential selling opportunities, because that's if it's a downtrend. But based on what we've seen recently, from the beginning of the year, we've always been waiting for a market crash, and it hasn't happened. Most of the times, it's just gone higher, which also brings us to a third scenario where it's more likely that NASDAQ and S&P are going to continue ranging than they are going to drop. That's also a very big likelihood because of uncertainty. Nobody wants to start selling their positions now, considering things are still, the US economy is still looking resilient. So that's one thing to look at. What do you mean when you say hawkish? So usually the central bank is mandated with raising interest rates or tightening monetary conditions or easing. Tightening usually leads to scarcity in a certain currency in the economy. And if it's tight, then that means economic conditions begin to deteriorate. But the purpose of tightening is to control inflation. So when you say that the central bank is hawkish, it means they are looking to make monetary conditions tight. When we say the central bank is dovish, then that means they're looking to make cash more easily accessible in the economy and to foster economic growth. So it's usually a stance between dovishness and hawkishness. Now, why would the central bank want to be hawkish and yet it's deteriorating the economy? It's because of inflation. That's why we started by looking at what is the situation in the US with regards to inflation. They'd want to make cash scarce. Yes, it's going to hurt businesses, but at the same time, it's going to control inflation. That's why we started by saying, what is the situation in the US right now? And here we said strong US data. Yeah. So we know that in the US, there is high inflation. And if there is high inflation, then they should be hawkish or tightening. But they've been tightening and there's still no signs that the economy is hurting from this. So the chances that they'll continue tightening. That's what we mean by tightening. Okay, having said that, thank you for joining this session. It was very short. Next week, we are expecting non-farm, and as soon as the expectations for what the figures should be come out, then likely going to see market repositioning itself. So if we start seeing a reading here for higher expectations for employment figures here, without even the actual coming out, we start seeing actual being higher and ADP also being higher, then that should tell you there's more reasons to believe that the dollar will continue being strong even before Wednesday or Thursday or Friday comes in, because considering the market runs on expectations. So that's what you should be looking at. I think by Monday, this should be, or even by Sunday, this should be clear what you're expecting in terms of employment and in terms of non-farm, both non-farm and ADP. So non-farm is on Friday next week, ADP is on Wednesday. And then we have, sorry, oh, now this is bigger. And then we have a meeting speech. Yeah, so yesterday I didn't have any source in terms of Powell speaking, so I can't really say what he said yesterday. Where is it? It's here. There was a speech at 11 p.m. Yeah, it wasn't anything particularly important. That's why the market hasn't reacted yet. So he's still speaking next week. So we'll have to wait. On Monday, I'm sure he's speaking, if I'm not wrong. Yeah, on Monday he's speaking. On Tuesday, no. So next week there'll be other members speaking. And of course, the market will be trying to deduce whether if they're hawkish or dovish or how their tone is in terms of tightening. And members is members of the central bank in the US. Okay, having said that, thank you so much for attending today's session. Are there any other questions? It's positioning for a major swing. Can you do analysis? S&P 500. Okay, let's see. Let's look at S&P 500. Let's see. S&P 500 is US 500 on the tickers here. So let's have a look at it. Okay. Yeah, this one looks like it's definitely going lower, but I'll still be skeptical with it. In terms of is this really a downtrend? So, okay, so let's first off explain what is causing this drop. This drop is being caused by the fact that everything seems to point to the fact that the dollar might be strong and the conditions in the US will remain tighter for longer. And that's why you are seeing the market dropping like this. However, there is this concept of which companies are resilient in the economy. And most of the times you'll see investors buying into Apple, Google, Microsoft, and the likes because they believe they are resilient and can survive a tight economy. Having said that, it explains why, in as much as we've been crying high interest rates for the better part of the year, the S&P has still been rising. So that's why I'm saying I'm skeptical whether we'll have a significant drop in the S&P 500 for maybe 2, 3, or a couple of months. Yeah. So having said that, it is possible to look for short-term opportunities to sell. So in that case, then in H4 and in H1, I can start looking for short-term selling opportunities, but I shouldn't want that to affect my opinion that there is still a high likelihood that the market will rebound and continue going higher, or at least range. In this case, at least stay in a range. So that's why I'm skeptical with trying to short S&P 500 at the moment. Unless maybe we wait for earnings and see how these companies are doing, then from there we can conclude. So if for me, I'd probably be looking for where things are a bit more obvious, like GU, Euro USD. Just a minute. So I'll be looking for charts where things are a bit obvious, like GU, XAU USD. These ones are a bit obvious. Euro USD, yeah. In terms of fundamentals, and then just doing your technicals properly so that you have a proper structure to get trades. So remember, the sessions are for fundamental analysis only. So it's up to you to do technical analysis, considering you already have a bias in the market, sentiment in the market from fundamentals you're doing. Okay, having said that, thank you guys for attending. Believe I've answered all the questions here. And see you all in the next stream. I think the next one will be interesting because we'll have none from that day. We will come back and see whether our thesis has been validated by the market. That is, did we indeed see the market after pullbacks, of course, after the market pulling back, did we indeed see continuation in the trends, or what happened during the week that changed that view? Okay, having said that, again, thanks for attending, and see you next Friday.